Hey everybody, welcome back to Grain Markets and Other Stuff. Thank you for joining me. It is Wednesday, December 2nd. As I sit here, it's about 12:30 p.m. Central Time. We've got kind of a mixed trade in the grain markets. The row crops actually came back after a sharply lower open. Thank you for coming back. Thank you for listening. Thank you for subscribing. Remember, if you have not already subscribed to the podcast, go on whichever podcast app you use, Apple, Google, Spotify, any of them, and subscribe so you are made aware when new content is available. If you are watching on YouTube and have not subscribed, make sure you hit that subscribe button on YouTube. Also, hit that like button on YouTube. That will really help me out as far as the YouTube algorithm goes. It'll kind of help me to generate some more viewers. So if you like what you're seeing here, hit that like button for me. I would really appreciate it. Remember, if you do need some help with your grain marketing, as always, go to standardgrain.com. Click on Grain Marketing Plan. It's in the upper right-hand corner here, and you can sign up for my subscription service for $49 a month. I'll send you my morning email every day at 6:30 Central Time in the morning, and I'll also send you a text message service. You'll get all the overnight headlines, everything you need to know for the day, and then I'll send alerts out whenever I'm actually marketing grain, and I'll tell you when I'm doing it, how I'm doing it, all the specifics. It's $49 a month. Again, you can cancel it at any time. Wanted to do a quick review on the soybean market today. We've had some selling pressure, and I guess one of the biggest questions I've had here during these last 3 days, where we've had some selling pressure, is, how low can the bean market go? So I guess this is going to be kind of a chart review for the most part, but I'm going to give you some technical targets here, specifically underneath the January soybean contract, which is the nearby contract, just to for some food for thought here, I guess. So here is the daily January 21 soybean contract. And above the market, I mean, this $12 even print, that's the obvious resistance zone. We peaked at that exact area, or within a couple of ticks of it, on 3 different occasions, and we've since backed off. We've seen 3 fairly significant down days consecutively here the last 3 days. So I guess the question is, how much lower can we go? What are some support levels below the market? I have kind of a big zone here of support if you're watching on the video, and I'll explain this to you the best I can. First off, there are 2 different trend lines that come up that I have pictured here. You've got the first one that sits at about 1106 today, and then this second trend line sits at about 1092. And then you've got that high from back in late October in the January bean contract that occurred prior to a correction at 1088.5. So I would say that, very simply, this area from 1106 or 1107 down to that 1088 area, that is your downside target if this correction were to continue. I think that would be a very logical downside target. We know that there is still a lot of fund length in this market that could be liquidated. We know that there are certainly some risks going into the end of the year. We've got some potentially improving South American weather. Export sales have backed off a little bit, but this is more of a technical conversation. So looking at the chart, I'd say that area here underneath the January soybean contract, which is about 1055 as I speak, that area from, say, 1109 down to 1088. That's kind of the big area of support that I'm looking at initially. So then the next question is, Joe, what if we go down and we trade below that 1088? We bust through both of these trend lines. We get below that 1088 number. I talked about this 990 to 985 level in past chart reviews that I've done. And I think that is still a target that could be achieved if you see some shifts in the fundamentals, if the funds really want out of this thing. I think that 990 level or 985 level, that neighborhood, is something that could be achievable. Remember, when we had our first real correction in this rally, which started back in like mid-September, and then it bottomed out in late September. When we corrected down to 990 in this Jan Bean contract. And there's a couple other reasons when I pull back the view of this chart why I think that level is important. You look back here in January, where did we peak? 985. We peaked at a similar area in the 980s here back in the fourth quarter of 2019. And then if you go all the way back in this Jan Bean contract, back to the first quarter of 2019, you had some highs here in the 980s. So I would venture to say that if this correction to the downside became really extended, I think that that area from 990 down to maybe 980, somewhere in that 10-cent range, will be seen as a support level and a potential downside target. I think that that is very possible. So, first things first. I mean, that your first major area of support, this 1109 today, and that's a number that moves up every day. So it's 1109 today. It's going to be 1112 tomorrow. It's going to go up about 3 cents a day. That's how trend lines work. They move higher every day. But that area down to that 1088, that's your initial kind of target, the way that I see it here. And if this thing were to become really extended, you break through both of those trend lines, you break through that 1088 level. I think that 990 down into the 980s is a logical downside target. I know that's a long ways away, and I know that that sounds crazy given some of the things we know about the bean market. But from a technical standpoint, that's what I'm seeing here. I know this was a brief chart review. I hope it was useful to you. If you like stuff like this, leave me a comment in the YouTube channel, and I would like to hear any feedback that you have, or you can shoot me an email to info@standardgrain.com. Everyone have a great day. I will talk to you in the morning.